Welcome back to Rapid Quants. This is Michael Merle. It is September 23rd, 2024, and we're back with another crypto market update. Okay, let's see where we are. We're moving upwards, and well, that's a good thing. And the thresholds for this week, which I have replotted on this graph, are at 67,418 and 59 and change. Okay, so roughly 59,000 and 67,500. Now, what do these mean? Again, standard deviation. I'm calculating the expected move for each week for each coin. And I have this handy sheet here somewhere on my screen over here. You can find it here at this URL, which is at bit.ly/crypto_EM echo Mike _ ranges. EM stands for expected move. And this is looking positive, but again, like I pointed out last week, we need to cross some thresholds here. And these thresholds are, well, the first hurdle is somewhere around 65K. Yes, I know. The expected move range now pushes us above that. And that's a good thing, right? That means that if we heave our collective crypto carcass, trademark pending, above this, above 65,000, then we have a good chance to make a beeline for 68, 67.5, 68, and then finally take off. Because unless we do that, we will remain stuck in this range. There are no two ways around it, okay? It's a pretty binary equation. This threshold needs to be breached, or this threshold needs to be breached to the south side, the downside right here, okay? I think the downside at this point has maybe a 30% probability. We've been in this channel for a very long time. We've always faced rejection somewhere around the 55K mark. If you cancel this one out here, which was really a scared children move, which happened very quickly and also was reversed very quickly, then this kind of leaves us with this support line right here. Just kind of illustrate this a little bit better. Somewhere around here. So a little bit lower than this line I've drawn. I'm really averaging this out, so there is no precise way of drawing lines. I might want to talk about that actually, especially if you're new to this channel. I see a lot of people draw lines, and I've drawn lines forever on charts, but I've always been very keen about pointing out that I wish they had a crayon tool, because fine lines don't hold up, obviously. And look at the freaking chart, right? The market doesn't abide by your bloody lines. It doesn't. It does whatever it wants. There are inflection points, and they will be roughly observed, of course, because you see formations and they're observed because everyone else is looking at them. Makes sense. We all collective creatures. We all respond to particular stimulus in the same way. We have all similar psychology, especially when it comes to the market. There's very few of us who really are resilient to these psychological traps we all fall into. Do a search on cognitive biases, and you'll find a long list of them, and be surprised how many of them there are. And it really pertains to trading psychology very, very strongly. And the reason why I'd like to have a crayon tool here is because these are just rough zones. And at this point here, somewhere around here, I can't tell you exactly what the point will be. At 66,000, at 68,000, maybe at 65,500. All of a sudden, the market is going to collectively respond, and boom, we either take off or will fall back down. There will be rejection. So what we usually see is rejection or acceleration. We'll see what happens here, okay? And the odds of us to just drop into the abyss here, I would peg them at, 5%, something very low. It just doesn't happen very often. There would have to be a major market event, and those, of course, are unpredictable. Knowing all this, let's just move on and look at Ethereum, and I have a bunch of other things to show you this week, so. Here's Ethereum. It's actually picking up nicely now. And I told you to watch this one. Remember last week what I told you? I said to you, watch Ethereum, because first up, it was the weaker of the two. And it was at a support zone that it really needed to defend, because had it breached through here, had there been rejection right here at this retest, and we would have fallen lower, all kinds of bad things would have happened. So that didn't happen. And now we're moving back up, and I like the pace of things. But again, you see the inflection points right now for this week. The expected move is 2,369. This is the lower threshold. And up here we have 2,790. All right. It lines up very nicely again here and also down here. Again, done algorithmically. and not me drawing these lines around manually. And I really like how this always plays out. Beautiful. Okay, total 3. That's just altcoins, basically. Or everything, depends on your definition of altcoins, but it's everything but Ethereum and Bitcoin. Looking good. Looking good. I like it. Similar situation actually as on Bitcoin, so I'm not going to test your patience to go through all this again. Again, the upper threshold here. I don't actually have an expected move threshold for this. I could calculate it, actually. If you're interested, I could probably include it as a signal in my other script that I run. But I don't think it's really that crucial. Because why? Well, we're not trading it. I actually have that running in a different way in regards to Veritas, because they actually have recreated this exactly. And I'm measuring altcoin performance and the trend via my Kalman filters that I've showed to you several times. The Kalman filters are an integral aspect of both Gravitas and Veritas. Okay, so we've looked at the market. Again, here are the thresholds, okay? That's the URL. You can look them all up. Very easy. It's a publicly available spreadsheet on Google. And if you look for a coin that you're interested in and you want to see where it might actually break out or where it might fail, if you're planning a trade, this is a really good sheet to keep an eye on and use these thresholds. I've also taken the liberty to highlight Bitcoin and Ethereum for you. Okay, a few other things I want to show you. I don't do this very often. It's very interesting though. Let me see if I can size this up a little bit because the type is so tiny. So this is coinanalyze.net, coin analyzer. And what you should be looking at is the funding rate right here. And I see a lot of green. That means that the shorts are getting paid right now because we have a positive funding rate, so many of them. And if the Bitcoin futures contract here is slightly higher, well, then it has a positive funding rate, which means that the shorts are getting paid a small percentage. And it has to be paid actually by the longs. And it works the other way around, of course. If this is all red, for instance, this guy here, right? Reeve. Right now, funding rate is negative. It's obviously down. That means, well, what I mean by down in this case is that the futures contract is trading slightly below the actual cash, right? The actual contract here, the actual token in this case. And as such, the shorts have to pay the longs. Why? Because the longs are taking the opposite side of the market. It's an incentive that keeps things in alignment. That's the idea. So they don't move away from each other. Otherwise, you could just go in and do some huge arbitrage, right? Would be awesome. Anyway, so this is how this works. Just want to show you this. And sometimes I take a look at this. So it's just going to get a quick overview of the market because it tells me pretty much everything I need to know, right? It's a little bit like reading the option chain when it comes to stocks. Another thing I sometimes look at is the old market value, realized value, Z-score. Actually, let me explain this one first because it's related, okay? So let's talk about NUPL because it also uses market value and realized value. So market value is easily explained. It's basically, I mentioned all the coins in circulation right now of Bitcoin and how much it costs right now. What is it right now? I don't know. Just look it up. Let's look it up. What is it right now? Bitcoin USDT. So you count all the coins in circulation and then you multiply that by 63,443. That's basically the market value. And realized value is a little bit different. Realized value is being calculated on the basis of when each of these coins have been moved the last time. So when you bought, let's say, Bitcoin a year ago, how much did you pay for it? Well, that's the value it gets attached. Your coin, your Bitcoin gets that value. Let's say it was, I don't know, a year ago, 20,000, 25,000, something like that. Woohoo, right? If you bought it there. Well, good job. And that is done for all the coins in circulation. Basically, the description is actually down here if you want to read it. It's on this page. It's at bitcoinmagazinepro.com. It's pretty cool, actually. So, and then we basically multiply that again, that value, by all the coins in circulation, and you deduct one from the other. You actually deduct the realized value from non-market value, and you get this. And it kind of tells you where we are because the whole purpose of the exercise here is to kind of see where we are in regards to how profitable people are. Why would you want to do that? What would you want to care about? Or what would you care about assessing how profitable people are in the market currently? Well, because it affects what we talked about in the beginning of this video, which is psychology. So psychology is very important. And if things are very profitable for everyone, well, then there's a pretty high probability that we're going to see a correction, maybe a major correction. And so what they've done here, which I think is actually quite cool, and I wish I could show this a little bit bigger. Let me see if I can. Yeah, okay. We have these up here, euphoria greed range, which is rarely touched. And then we have this one right here, which is, I don't know, what is it? I don't know. Less greed. It's more than optimism, right? Down here is optimism. Here's, I guess, greed, and then here's euphoria, right? And down here's hope and fear, and here's basically capitulation, which we've seen a few times. Where are we right now? Well, that's one thing you should look at, of course. Where are we right now? Well, we're somewhere in the optimism, but it's a range, but there's still a bit anxiety, right? But you see that a lot. If you go back here, okay, let's correlate that. Let's look at where we were. Let's see, recently in 2000, wow, this goes way back. In 2014, we were just about to breach above the optimism range. We were around here, see that? And then it really took off. Same here. We were scraping it and it fell back down again. And it took a while back actually to come back here. And we only here, see that? Here, fairly late in the game actually. I mean, this looks like nothing now, but this was quite an advance at that time. Here we crossed over into the more, belief. Oh, here it says it actually. Belief and denial. Well, denial on the way back, on the way down. So here we crossed over and see again how it took off. So where are we right now? Same thing happened here, by the way. Well, we crossed over for a little bit and then we flattened out. Sentiment somehow dropped. But in terms of the market, right, we haven't really gone that low. But psychology has dropped quite a bit since then, which I find really fascinating because I see similar observations on what's like trend, Google Trends. Yeah, I see the same thing on Google Trend. And when you look up the keyword of how often things are talking about Bitcoin or crypto in general, and the interest has dropped quite a bit. And that's usually a pretty good indication, especially when it's correlated with consistent upward progress on the price side, that we might see a breakout. And I think we're getting there because we're kind of kissing the threshold here. Price is stabilized quite nicely, actually. See that? I mean, come on, where are we? 63K. It's nothing, right? In regards to the distance from major highs, where we're like 71K. But people are still very bearish, actually, out there. It's so interesting. So if we breach over here, let's say end of the year, beginning of next year, I think we're going to just take off like a rocket. All right, there's another chart that's related. Again, same concept, market value versus realized value. And this time we're Z-scoring it. A Z-score is basically you are factoring it by, again, like the expected move range, right? Standard deviation. So we have basically 1, 2, 4, 6, 8, 10 standard deviations here, which is, of course, 8 standard deviations completely out of control. That's crazy, right? That's really far out on, right here, the bell curve. It's really far out. I mean, 8 standard deviations, it's like way out. And it happens very rarely, and it should happen very rarely. And where we are right now, well, we're still way down here. We're not even crossing the 2 yet. And actually, even when we were here, where the market was already at, what was it? Oh, just this market cap, okay. But if you correlate with price, I mean, what were we at? Maybe 71K. We just saw it on the previous chart. We didn't really go this high yet. So my point being, there's plenty of space to grow to the upside here. Plenty. I think it's just going to go crazy. Once we're hitting those thresholds that I've been monitoring, it's just going to go nuts. So I'm pretty positive about that, actually. So what else is going on? Oh, yeah. I wanted to show you quick. Let me flip to the other desktop here. Where is this? The comments basically from Gravitas. It's long right now. I actually have this open right here. And it went long a few days ago. And it's already very nicely in profit. You can see it actually did fairly well here. Given the chop it's been through, Gravitas has done just really phenomenally. It got hit a little bit here. This was this one point where it just barely snuck it, right? Where it barely crossed over and then took the wrong side. It should have stayed short for a little bit longer. But this happens. You can't completely optimize it. But here, look, I mean, we remained fairly flat here, doing all this chop, and I really love it. So now we're taking another whack at the long side. It's doing fairly well. It's in profits. I like it. We're already at, collectively since 2020, now at 95K now. So I'm liking it. Okay, a little change real quick from crypto to stocks. So I talked about this in a different video. You all know I'm also a very avid stock trader and especially options trader. Stock options is actually my bread and butter. And also trade on volatility, implied volatility. And that's something I really want to do on the crypto side. And that's definitely coming in the next year. Absolutely. Because there's new tools out there, especially for institutional traders that are out there that would give me quite a lot of the capabilities that I now currently enjoy on the stock side. And I'll leave it at that because I don't want to get into details. But this is one little tool I wrote many, many years ago, and I'm still using it, actually. IBTS. So IBTS is basically related to the implied volatility term structure, and that's the delta between the 30-day VIX and the 90-day VIX. There's a good video that I posted on my YouTube channel. So if you're really curious about this, watch this video. You'll find it quickly. It's just maybe a week or so ago or 2 weeks ago. And this summer I was so prolific, I don't know for whatever reason, and I did write a system around it, and I've been running it, and that's what it's been doing. So, and this is actually just since April. I've plotted this, and again, I have another video on this, since 2020 or so, and it's just straight up. I mean, it's just crazy, absolutely crazy. I'm not going to run it right now. I have done it in the other video. So again, if you're a stock trader, especially if you enjoy trading volatility, let's say you trade on the VIX, the VX futures, or I don't know, one of the related ETFs, you definitely want to watch this video. It's absolutely awesome. The system is really kicking butt and taking numbers. It's done it for years. I love it. And I'm actually going to make it a single in a few weeks, probably before the end of the year. I'm going to make it available to everyone. All right. For now, the code name is VIXEN. For obvious reasons. VIXEN. Well, come up with a better name. All right. I think that's all I got for this week. It's long enough. Thanks for sticking it out. And I see you all next time. Cheers.